So what does a complete estate plan actually include? It's more than just a will. A full estate plan should have a valid will, a trust if needed, healthcare and financial powers of attorney, and most importantly, updated beneficiary designations. And here's the thing, even if you checked these boxes years ago, they need to be reviewed regularly. We recommend updating your estate plan at least every 3 to 5 years or after any major life change occurs. One of the most overlooked steps is updating your beneficiary designations. This one is big and it surprises people. Your will doesn't control what happens to your IRA or life insurance policies if you've listed a beneficiary on the account. In fact, those beneficiary forms override your will. So if your IRA still names an ex-spouse from 20 years ago, guess who gets that money? I've seen it happen. That's why part of estate planning and retirement means reviewing every account that passes by title or contract, like IRAs and 401ks, life insurance policies, transfer on death brokerage accounts, payable on death bank accounts, and don't forget your contingent beneficiaries, your backups, just in case. When's the last time that you checked your beneficiaries? If you haven't done it in a while, this is your nudge to do it. And let us know in the comments if you've run into any surprises there. I'd love to hear your story. Now, let's talk about your will. Your will spells out who gets what and who's in charge. But if it's out of date, it could be sending your assets to the wrong people or creating stress for the ones you care about most. So ask yourself, are the heirs still accurate? Are your listed executors still alive and able to serve? Have you sold or added any major assets since your last update? And remember, your will only governs assets that don't already have a named beneficiary or live in a trust, which is why we always recommend looking at your entire estate, not just the will in isolation. Now, I hear this often, do I need a trust? Well, the answer is not everyone does, but if you're in retirement with significant assets, it is worth considering. Trust can help you keep your estate private and avoid probate, provide structure for heirs who need financial guidance, control how and when assets are distributed, and plan around taxes and long-term care expenses. A revocable living trust is the most common type of trust. It gives you flexibility and helps your estate avoid court delays. There are also specialty trusts like charitable trusts or life insurance trusts that serve more specific goals. This is where having a fiduciary advisor and a good estate attorney can help you choose the right tools for your plan. And don't forget your powers of attorney. This is one area we see a lot of gaps. Even if you're married, your spouse may not automatically have authority to make medical or financial decisions for you. That's why it's essential to have 2 legal documents, a healthcare power of attorney for medical decisions if you can't speak for yourself, and a financial power of attorney for managing your money, bills, or accounts if you're unable to do so. Make sure they're valid in your state and easily accessible in case of an emergency. Now let's touch on estate taxes, because they're back on the radar in 2025. Right now, the federal estate tax exemption is historically high, around $13.6 million per person, but that's scheduled to drop by half in 2026 unless new legislation is passed. That means if your estate is even close to that threshold, it's time to talk about gifting strategies to move assets out of your estate now, spousal lifetime access trusts or SLATs, grantor retained annuity trusts or GRATs, and even Roth conversions to reduce future taxes for your heirs. Even if you don't hit the federal limit, some states have their own estate or inheritance taxes that kick in at lower levels. Bottom line, proactive planning helps you pass on more to your loved ones and less to the IRS. Now, here's a real-life example of why timing matters. We recently worked with a couple in their late 60s who had moved to a new state after retiring. Their wills were over a decade old and they hadn't touched their beneficiary forms in years. As we reviewed their documents, we found that their powers of attorney weren't valid under their new state's laws. Their investment accounts still listed their adult children as minors, and their trust hadn't been funded properly. We helped them update everything from beneficiary forms to estate documents to investment alignment. Now, their plan reflects the life they're living today, not the one they left behind. And just as importantly, they're no longer worried about leaving a mess for their family. So let's wrap this up. Estate planning in retirement isn't about preparing for the worst, it's about protecting the people and values that matter most to you. And you don't have to figure it out on your own. At Haywood Wealth Management, we work alongside estate planning attorneys to help you coordinate your accounts, documents, and tax strategy, keep everything current and legally sound, and build a plan that reflects your legacy, your values, and your peace of mind. If you want help getting started, you can schedule a retirement pathfinder analysis right now at haywoodwealth.com. This is a personalized one-on-one session where we'll review your retirement goals, your estate plan, your tax picture, so you can feel confident about what comes next. You can also give us a call at 281-848-2566 if you'd rather speak to a real person. If you found this video helpful, please give it a like and subscribe to the channel for more content like this. Also, please share with a friend who might need an estate planning check-in this year. And thank you for watching. Remember, peace of mind doesn't come from having the perfect plan. It comes from knowing your plan is up to date and built for the life you're living right now. Hi, my name is Justin Haywood, founder of Haywood Wealth Management. And if you're interested in learning about how we help our clients live their retirement to the fullest, visit us at haywoodwealth.com. Thank you so much.